Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Stock Monday buys for the M1 Finance Roth IRA portfolio. We're going to be taking a look quickly at stock futures for the week, currently looking positive. Not a whole lot of news going into this weekend. Pretty quiet overall. Short week last week, vacational. Lots of personnel are taking vacations. So going into this week, we're not seeing a whole lot of news either making the market go higher or lower. We're going to be covering the overall activity for the past week, what stocks went up, what stocks went down, what our overall average up or down was for the week. We're also going to be taking a look at what stocks paid out dividends last week. I know we have some cash sitting in the account, and we're going to go over what stocks I am buying this week within the M1 Finance platform. So if you are brand new to the channel, have not yet subscribed, hit the subscribe button below. I cover the stock market, dividends, real estate, personal finance. If you do enjoy this video, find it helpful, hit the thumbs up. I always appreciate all those thumbs up. Thank you all to the community who help promote these videos for others to view and learn from. And if you have any comments, questions pertaining to this video, stock market, dividends, real estate, personal finance, drop it into the comment section. I do read and reply to all your comments. If it is something I feel would benefit the entire viewership, I will go ahead and select the video, make a video, select the comment, and make a video on the topic, and hopefully it will benefit all my viewers, subscribers, and the one who had dropped the question. So with all that done and discussed, let's go ahead and get into the video. I will be flipping my screen around here and going ahead and sharing my screen here. So currently I have stock futures up. Everything is currently looking positive. Not a whole lot of news this week. We ended Friday in the negative. S&P down 0.18%. The Dow Jones down 0.16%. The NASDAQ down 0.10%. So overall, we had a very positive week. S&P was up around 1.65 with the NASDAQ around 2. Dow Jones somewhere within that range. So overall, very stock market positive. We hit all-time highs on Thursday, and not a whole lot of news has really came out on Saturday and Sunday to make the market move higher going into the week or lower going into the week. So really, I think this week we may just sort of coast across the week. If we have some news that's either positive or negative, the market would just kind of get affected by that. But I think right now investors are currently looking forward to earnings season. So I think that's what is on my mind. So I'm looking forward to earnings season right now. Trade talks are going between the US and China, which is helping push a lot of those companies that have recently had issues. And we may see continuation in the markets just from that. So let's go ahead and get into the M1 Finance platform side. So up at the top, we can see July only. If you go ahead and sign up through a referral link, an affiliate link down in the description below, you will get $20 for just signing into the M1 Finance platform. So maybe you're out there, you're using Robinhood, Webull, First Trade, or some other platform, but you have watched my channel, you've watched other channels that cover the M1 Finance platform, but you really want to get into it because they offer free buys and sells for stocks and exchange traded funds. You get partial shares, you get retirement accounts, you can get scheduled deposits and automated investing all within one platform for long-term investing. This is a great platform for that. So if you haven't signed up, now is the time to be signing up to get that 20 bucks down. Sign up, click link in the description below, and let's go ahead and get into the remainder here. So Roth IRA is currently pulled up on the board. This is showing my 1 week performance. If we take a look at the overall return for this portfolio, up about 18.25%, pretty good overall. We can see some of this is from market gains. 1,090 is from market gains. 450 is from dividends that have been paid out or earned within this portfolio. Now jumping into the overall 1 week performance, this is what I like to look at when comparing it to the market. So last week the S&P was up around 1.65. This portfolio was actually higher at 2.06. And why was it higher? Well, if I flip over to my gainers for the week, we currently have the week up. So this is going to show what my gainers were this week. We had Las Vegas Sands up 4.66%. We had Avery Dennison up 4.15%. We had Kellogg's up 4.11. It's unfortunate with Kellogg's. I would have really liked to have Kellogg's have just relaxed, not jumped as high as it had. That was one I was wanting to add recently. Cisco also up 4%, 4.07 there. So my big winners this week are these four within the 4% range. We have a few stocks within the 3% range. The majority of the remainders are within the 2 and 1%. And down towards the bottom, I have my 3 losers of the week, which are Caterpillar, Chevron, and 3M. Down a little bit over, almost like 0.75% down this last week. So really not a whole lot of negativity there within the portfolio. I do have $5.34 sitting in cash. The issue right now with M1 Finance is that they're not showing me. If I go here and click, this is my activity back from July 1st, last Monday. This is only showing the dividends that I reinvested last Monday at $4.57 and $3.99. I made my Stock Monday Buys video last week where I covered I was buying Avi, Caterpillar, and Eaton Vance Corporation. Now this week we don't have an area here we can just sort of click on and see what companies paid out this cash. Until I actually invest it here on Monday, I won't actually see what companies have actually paid out those dividends. One of the flaws of the M1 Finance platform. So we've covered the weekly performance up 2.06. We've covered we have cash on hand, $5.34. So I also add $115.38 into the market every single week. And I have a lot of investors that ask me in the comment section, why do you add $115.38 into the portfolio every week? Well, every week I add $115.38, multiply this by how many weeks are in a year. There's 52 weeks, and that gives me $5,999.76. Now the M1 Finance, or just the overall Roth IRA and IRA contributions limit for 2019 is $6,000. So by doing this every single week, I am not going over $6,000. I will be hitting $5,999.76, and then I can make a single contribution of 24 cents in order to get that $6,000 contribution limit for 2019, and then in 2020 I can continue depositing my $115.38 for the 52-week period in 2020, capping that out as well for the $6,000. So I have that question pop up quite a bit. I figured I would cover it here within the video, and it's just something that I normally get here within the comment section. Now, what companies am I buying this week? Now, in order to sort of do this, I could go ahead and sort this way, clicking on the all, clicking on down here, and sort of by what companies are actually down. This is showing the Altria, Avi, 3M, and Caterpillar, and Kellogg, we forgot Kellogg's, are down roughly about 19 to 4%. Now, 5 out of my 34, I believe, holdings is actually pretty good. I would like more opportunities to average down, but the market has been on fire lately. Now, I recently mentioned earlier that I recently added a brand new stock into the portfolio, and I do plan on averaging up on this position. It's not something that I normally do, is average up by buying company. Averaging up just means that I bought into a company, it has appreciated by a certain percentage, and by buying more of that company, I will be increasing my unit cost, I will be decreasing my yield on cost, and just sort of it's a lower buying power for my dollar because I am buying it back at a higher price, but because I believe this company is still trading at a fair valuation or an undervalued valuation in my opinion, I believe by buying into this now, I can grow my equity within this this stock, and over the upcoming months, years, this company would just become another 30-40% return, company here over the next future outcome. So that is one I have specifically set to the side that I want to continue to buy into this week. Now, my other companies here that I want to be buying, I will for this flip over to my spreadsheet here. My spreadsheet really helps me out. I know a lot of you guys have been asking me about my spreadsheet. I add a lot of information into my spreadsheet that is specific to me. It is not information, only the blue here is information that I generally adjust. Everything else over here, these are all automated in some way, or I actually have all of these little side numbers over here. These are all that I have to manually input. I go get the information and then put it in And it's just something that I like to do. I do this every week. I don't look and update my spreadsheet every single time I make a buy or a sell. It's just something I manually update every week, and it's upkeeping. And it's just nice to kind of do this. I'm not sure if it's something, OCD related, but I like to be organized within my spreadsheet here. Now, kind of sorting this by my gains and losses here within the portfolio, I can see here that I actually have 9 positions that are negative right now. Some of these are including AT&T as far as cost basis versus current cash. Now, over on the M1 Finance platform, AT&T, let's go ahead and sort this. It would actually be in the center here somewhere. AT&T, let's go ahead and look for it right here. Now, AT&T in the portfolio is showing positive 7.43%, but over on my spreadsheet, it is showing down 0.54%. What is up with that? That is because M1 Finance counts your dividends for you towards your actual return. So market gains, I am down $3.81, which is a negative return of 0.54. But because M1 Finance counts all the dividends that have been paid out over the past year and a half since buying and holding into this company, it actually gives me a rate of return of 7.43%. My cash return here, I forgot what it's called, but cash-wise, I've made 7.43% just by buying and holding this company. My unit cost on AT&T is at $34.48. So really, I am actually down in this position currently from the current stock price, but because I've held it for over a year and a half, I've actually made $40 in dividends. So kind of interesting the way that kind of plays out over the long term. You'll see how this kind of works out as this portfolio continues to grow and build over time. Now, the other companies here, as I mentioned, I want to be buying Eaton Vance Corp. So I'm going to go ahead and open this up over in dividend.com. The other company I would like to target is companies that currently are going ex-dividend in July. So AT&T is actually going ex-dividend here in July, but they are not on my current radar as far as buying. If AT&T were to fall back into that $30 or below range, I would probably buy more AT&T, but currently at its current valuation at $34, I do not feel it is a good opportunity to buy AT&T. There may be some market sentiment that causes this stock to fall, and that is when I will buy more AT&T. Now, other companies here going ex-dividend here in July are Caterpillar. Caterpillar is one I wanted to continue just buying a little bit more equity. I would like to have my equity over $700 in Caterpillar, and then I'll stop investing towards it overall. I just kind of let it sit. Also, 3M is one I would like to also add a little bit more into. It has came down recently. I believe this week 3M was actually down for the week. Let's go ahead and take a look. Actually, it would be towards the top. So 3M was down this last week, so it's not fully recovering right now. It's sort of in a limbo phase. Let's go ahead and select it. We'll take a look at the 1 quarter performance. We can see here, I guess it is making its recovery. It is starting to make its recovery here. I think that's a bad chart. Let's go ahead and just view the company chart overall past 3 months here. We can see here the lowest that it fell to was 160. So 3M is actually on the up and up right now. Right now, it has been having a couple times where it chugs higher. It has a bit of a cool off. It gains higher. It breaks a new barrier on its way up. It trends sideways. Currently, it is kind of falling here slightly, but you can see here lows of 170, 150 before kind of popping back up into that 173, 174. So buying it right now, I would be lowering my unit cost, my yield. It would be increasing my yield on cost. I would be averaging down on 3M. So it is not going ex-dividend here in July, but it is going ex-dividend in August. I think 3M is actually moving back higher. I would like to continue to buy currently where it's offering me a 3.35 starting yield, whereas my initial starting yield is currently around 3%. So I'm going to go ahead and I'll bring that one up as well. Altria doesn't go ex-dividend until September. I'm not looking to add any more equity into Altria. That's almost a $700 equity position. And AbbVie is at $751 in this portfolio. I bought about, I think it was 20 or 30 shares over on my Merrill Edge platform. I think it was like $2,000, $3,000 that I bought of this specific company in that $68, $69 range. So this position here is completely fine. I will not be adding into AbbVie either. So that leaves me with three companies that I have currently pulled up. First is Eaton Vance. This one is one that I recently added into the portfolio. It is currently positive by a very small percentage. It is positive by 0.55% or 24 cents. So really, I would be basically not really, you can see here, I'm getting a starting yield of 3.19 versus 3.21. It won't really hurt my starting yield. I probably won't even phase that much just due to the amount of equity I will be adding into it. We'll kind of see here if that plays out. SPG is another one that is traded near 52-week lows. It doesn't go ex-dividend until August, but it's still one that is currently trading near 52-week lows, and it is something I want to buy more of right now. I'm getting a starting yield of 5.03 in a very good real estate investment trust. Now this one has 9 years of growing and paying out dividends, so it's not a 10-year sort of real estate investment trust such as ticker symbol O or WPC, but it's still going on the up and up. So we'll see how this sort of plays out in the future. Now I have 4 companies that I have selected here to go ahead and possibly buy into. Now I'm going to go ahead and put them, let's see if I've done this, Caterpillar, 3M, SPG, and what was my other one? EV. Okay, so those are the 4 companies that I currently have up. Eaton Vance. Eaton Vance should be going ex-dividend here towards the end of July 27th. Caterpillar, I believe this one goes ex-dividend. This one goes ex-dividend on July 19th. That one actually goes prior to Eaton Vance. 3M doesn't go ex-dividend until August. 3M, if we kind of scoot down here, we'll see August 23rd is when 3M goes ex-dividend. That's still a month away. And we have ticker symbol SPG. This one goes ex-dividend midpoint August. I guess that's another month away again. So Caterpillar, Eaton Vance, SPG, and 3M. Now jumping into my sort of charts here, I'm going to go ahead and redo these. I'm going to put them in the order here that I placed them in as far as my tabs go. And I'm going to go ahead and cover these really quickly as to why I have bought these and will continue to buy them for the foreseeable future. Now, Caterpillar, we're currently looking at the 1-year performance for Caterpillar. We are trading currently at what would be considered semi-highs for the current period, but because I bought into Caterpillar at a higher price currently now, by buying it right now, I'm kind of lowering my unit cost. I'm down roughly 8% on the position, but I will be getting a 3% starting yield. I will be increasing my dividends. I'll be getting a better bang for my buck. Now, it has some highs of about $150. If this can turn around, now with trade talks, tariffs not getting raised, if there is a trade deal that is done and out of the way, Caterpillar, 3M will move higher. That is something that has been slamming these industrial companies, and by buying them right now at this opportunity, going into the future, that could show more growth. And this bottoming out point, this little point here that we're kind of buying them at, will get kind of phased. A lot of investors will look back and say, man, I really wish I had bought Caterpillar or 3M and those valuations that they were offering at that time. So Caterpillar here, 135, it recently broke the 200-day and 50-day moving average. This is actually showing you an incorrect starting yield. The correct starting yield is 3.04 as my spreadsheet here has shown. Now, kind of jumping back over here. Now, why am I buying every single one of these companies? So over the past 10 years, I like to go ahead and show this. This is the way that I research companies, is I look at their revenue, net income, free cash flow. Caterpillar, all positive across the board over the past 10 years. Eaton Vance, all positive across the board across the past 10 years. Simon Property Group, also positive across the board. And 3M, all positive across the board. Now, if I'm looking at current valuations compared to their 50-day, 200-day moving average, and we're kind of bringing back their unchanged, we already saw sort of Caterpillar here. Eaton Vance, I'm getting a starting yield of 3.10% here. We can see that Eaton Vance is currently trying to break out. It recently broke above its 200-day trading average. So this is a really good sign that this company could move back towards highs of over $50 and continue higher. We can see some 5-year periods, whereas Eaton Vance was trading at that $56 point. Now this is an asset management company, has been growing and paying out dividends for the past 10 years. Then over the past 10 years here, you can see a good sort of momentum here for the past 10 years. Now there's a few periods where that starting yield does get up into that 3% range, but every single time that it does hit 3%, you can see that it quickly snaps up, the stock rebounds, and there are periods where it does dip. These are these buying opportunity, rebounds, trade sideways for a while, goes into a buying opportunity, goes higher, goes into a sideways, buying opportunity, and here it'll kind of rebound back into that $60 range and continue moving higher into the foreseeable future as they continue to raise and grow and pay out that dividend that has a starting yield of 3.19, very low payout ratio, and growing and paying out dividends for the past 38 years. Now, Simon Property Group, this one is currently trading at 52-week lows. Currently, it has broken below both the 50, 200-day moving average, is offering a starting yield, as we said, about 5.03. Let's see here, 5.03% starting yield. We already saw its financials. This company here, over the past 10 years, very nice, strong growth, has recently hit a bit of a snag. SPG is in the retail real estate investment trust, real estate sector with Amazon, with many other sort of retail companies, kind of getting slammed recently. This one has taken a beating and is currently trading at is a 52-week low. So this could be a little bit risky here in the short term, but I think over the long term, it'll really play out. This will rebound in the future. You can see here that it has hit below that 160 range, was quickly rebought back up, and we'll sort of just see how this one plays out. I think this will be a good buying opportunity for my portfolio. I would not, do your own research, of course, on all companies that I'm currently talking about. Always do your own research. Don't ever just invest into companies that you see YouTubers, other investors buy and hold because, their own reasoning. Go out there, do your own research on the platforms, the stocks, and choose why you're investing. I'm just kind of going over why I am choosing these specific companies. Now the last one is 3M Industrial. Very similar to Caterpillar, has been getting beat up by the trade war. We can see a huge nosedive. I think this is earnings, but this is just an overreaction here. You can see within the short term, the past 3 months, it recently had a low of 158, I believe was its low, 160, 158, somewhere within that range. Quickly got bought up at that point. It has been quickly rebounding, move into a new, broke through resistance, hit a sort of support, rebounded higher. It's hitting support and kind of just trending right now. It'll kind of continue moving higher in the foreseeable future. Plus, I'm getting a starting yield of right around that 3.3% starting yield. And these are all positions here that I've already started positions in. I'm just averaging down, except for my Eaton Vance. I'll be averaging up on that. But that is because I see much more growth in the foreseeable future for this specific company here in the short term. And in the long term, I believe this will be a very good financial and asset sort of management company to add into my portfolio to really give it balance. So those are the 4 companies that I will be buying this week. I have made a bit of a long video this week. I'm very sorry for you guys. Let's see if this will kind of let me do my buys now. So while this is sort of loading, I'm going to go ahead and bust out my handy dandy calculator, punch in my 115.38, and add my cash that I have sitting in the account. I am looking like I may have to log back into M1 Finance, or the platform could be a little slow here. I'm going to see if I can load it up on my other screen. And there it goes. See if I can bring it over and close out of this one. Okay, so my 4 companies I am buying this week, sort this by my negatives. I will be buying into Caterpillar, 115.38 plus 5.34. That is 120.72. I'm going to go ahead and divide that into 4 companies. That is roughly $30.18. So into Caterpillar, I'm going to go ahead, and I always like to overshoot into all my companies. I don't care really what sort of the equity goes into this, but I'm going to go ahead and overshoot. So I'm going to put Caterpillar, $35. I'm going to go ahead and go back into my portfolio, click on Eaton Vance. I'm going to go ahead and buy, sell this one. I'm going to go ahead and punch in $35 on this one and confirm. And I'm going to go ahead and go back to my portfolio. I am going to go ahead and click on SPG right on here and go ahead and select buy sell. I'm going to go ahead and punch in $32 on this one and continue and confirm. And then my very last one, my fourth and final one, is 3M. I'm going to go ahead and click and select this one, click a buy and sell, and then punch in $34 on this one. So that means I'm going to have $134 of cash that's estimated to go into the markets here. Those will be my 4 buys for Monday. I'm going to be overshooting just in case I do have other cash that hits the account on Monday. I don't just have that all invested into the markets on Monday. If I start up negative on Monday, that'll be very positive because I will be buying these companies at a better opportunity versus right now when I'm looking at them now. So that is it for today's video. I hope you guys have enjoyed this video. I try to cover what stocks I am buying this week, why I am buying them. I think that really helps out a lot of the viewers, some of the subscribers. If you're a brand new investor, kind of looking at why I'm buying specific companies, I look at the financials. I'm already invested in these companies. I've already done a deeper dive, but I want to just kind of showcase why I feel they're at a really good valuation right now and why I am not afraid of them in continuing to invest in these companies long term. So that is it for today's video. If you have enjoyed the video, hit the thumbs up button below. I do appreciate all the thumbs up and support that I do receive here on the channel. I really appreciate here the community that we are building. And of course, if you have any comments, questions, want to share some information or ask a question about stock market, dividends, real estate, or personal finance, drop it into that comment section below. And if you have not yet subscribed, I'm trying to hit 5,000 subscribers here on the channel by the end of 2019. Let's go ahead and make it happen together, growing the community out here. And subscribe to the channel. I will see you next time. Have a great day. Bye.